Nike shares are sharply lower this morning. The company reported earnings that beat the street's estimates, but revenue fell short. Nike also withdrew its full-year guidance and postponed its investor day as it prepares for its new CEO, Elliott Hill, to take over on October 14th. Joining us right now is Bob Drbul. He is Guggenheim Securities equity research analyst. And Bob, I guess if I have to look through this, yeah, the stock's indicated down pretty sharply, back to 84.20. But really, if you think about it, that's kind of still above where it was when you heard that Donahue was out and was stepping down and Elliott Hill be coming back in. Maybe, okay, he may be gone, but the problems at Nike still remain.
Yeah, I mean, there's still a very tough task at hand, for Elliott as he comes in. I think what we got was just a better place setting for the table to see, okay, what really does he have to deal with as we move forward? And I think, the quarter was largely in line with expectations. Inventories were a little higher than we would have liked. I think sales came in a little lighter, and the environment isn't great, and competition isn't going away. So, I think as we look forward, the next few months aren't critical. I think what we're really focused on is the next few years for these guys with the new chapter at hand here.
I think maybe some of the stuff that came out of the call was concerning, just about how long this is going to take. They made the point on the call that their deliberate pullback from some of their top brands, whether that be Air Force One and Air Jordan 1, that's going to last. They can't fix that immediately. That's going to last through the end of the fiscal year, which doesn't end until May of next year.
Yeah, I mean, I think it's supply-demand, imbalance. They're focused on it. I think the good news is they do have their order book being finalized for the spring, so they will be able to sort of, better check, what their inventories are in the spring versus where they are right now. And, and I think that those businesses are manageable. They're being managed lower. And I think some of the newer initiatives at hand and some of the new shoes that they're bringing out are encouraging, but they're just a small piece of the puzzle right now.
Yeah, my guess is, though, even though Elliott Hill hasn't started yet, that's not till later this month, my guess is he's already made all kinds of calls and had all kinds of meetings with the retailers and others who are so important to them.
Yeah, no, I think there's been a lot of discussion about the investor day being postponed. I think it was the right thing to do, like give Elliott Hill some time to, put his team together, meet with his retail partners, try to figure out, what's working, what's not. Give the guy a little bit of time, and then we'll, figure it out from there. But
what about the stock this morning? Okay, now we're looking at it 83 and change. Does that make sense for the business, what it's going to deliver over the next 6 months to a year?
I think it does. I think when you have a change in leadership, we're all trying to figure out what exactly he's going to do differently. Elliott's experience is very marketplace oriented, and I think that's one of the biggest challenges that they have at hand, which was they've given up a lot of shelf space with their retail partners, so they got to win them back. Basketball continues to be very strong, but the running area, they said running was up double digit. It's smaller than it was. They've got a lot of new shoes coming out, over the next several quarters. I think that's the critical piece, and I think they really need to focus on innovation with some new products to really jumpstart.
Specifically in running.
Yeah, definitely.
That's where they're facing the biggest competition.
That's right.
So do you think this is fairly priced? You wouldn't necessarily say to buy it here, wait and see what happens?
I think our target is 110 now. We did take it down slightly.
110's a lot higher than 83. Yeah,
no, because I think ultimately I think the brand remains very strong, very competitive. The balance sheet, $10 billion of cash. They have this treasure, war chest that they can really compete with financially. And the retailers really want to partner with Nike. When Nike's successful, the industry is successful. So I think there's a lot of broader ramifications for what can happen here. And I think Elliott's got tremendous experience. And I think you put that 32 years of experience at the helm. He knows the culture. He knows the industry. And just going to take a little bit of time.